Hello, welcome to another video, right? So this will be our second class, and this class today will be talking on inducement and briefly on breakout structures. So we already saw what were valid pullbacks and how to identify them. Today we are going to be looking at how to identify valid inducement and how you can use it to identify valid breakout structures as well. So we start with the line diagram as always, right? So we said if the market is pushing up like this, it does a valid pullback, right? I already told you how to identify a valid pullback. So now, let's say the market is at this point and it has created this pullback. So from the point the market is, this is please bear in mind that this is a bullish example, right? This is when the market is going up. So at this point that the market is, you start from this point, you look downward. The first valid pullback that you see is what we call your inducement. So in this case, this will be our inducement in this case. And let's say the market at this point now goes ahead to create another pullback here, and the market is now here. So what happens in this case now is that if you look through, if you start from from the top here and you look downward, you see that okay, this is no longer our first pullback. This pullback now is our first pullback. So we need to move our inducement from this zone to this zone. So once we move our inducement to this zone, we keep trailing. So while we are trailing, what are we looking for, right? We believe that inducement, this zone here that we call an inducement, is just a zone where liquidity is resting below the zone. So in this case now, we are anticipating that the market will eventually come below and take out this inducement to rally up. So an inducement zone is just a zone where traders will be tricked into buying from this zone in this bullish example, right? So if you look from here, you see that this is not just an inducement zone, it will have some sort of a demand zone here. So when the market starts approaching this zone, people will be looking to buy off this zone. So the people that buy off this zone, put their stop loss here, will get rated, and the people that sell off after this break below this low, the support and resistance traders will also get rated when the market finally rallies up. So what is our point for this inducement, right? So you know that SMC is a liquidity based strategy, and for SMC to move effectively, for the market to move effectively, we need to take out inducement, we need to take out liquidity. The market needs to take out all this liquidity before it moves in its intended direction. So now looking at this, what we normally anticipate in this case is for the market to push below this inducement and then go ahead to break structure. So now in this case now, you see that we use inducement to identify valid break of structures. You see, I did not mark this as a valid break of structure because simply this was just another higher high here, higher low. This doesn't qualify as a valid break of structure. So now what qualifies as a valid break of structure in this scenario is this. This is what qualifies as a valid break of structure. Why? The market has gone below and taken out the first pullback, right? The first pullback. So which acts in this case as our inducement, the zone where the liquidity lies. This is the zone where the liquidity lies. So this move here has just grabbed the liquidity. It has grabbed the liquidity below this zone and rallied up. So this is how you identify an inducement, and this is how you identify a valid break of structure. It needs to take out an inducement first before it gives us a trading range. Now, what do we have here as our trading range, right? We have from this low here to this high. If you look at it, this is where our zone is to currently where the market is. So eventually what we are looking for now is for the market to create like something like this. Then when the market eventually returns, now we can look for an entry somewhere around and buy to target the upside. So this is how we trade through SMC. This is how we identify inducement, and this is how we map it out. So let's go to the bearish example so that you can also understand how this bearish example works. So on the bearish example, we have the market pushing down, right? The market creates a lower high and a lower low. Now, once this market creates a lower high, a lower low, we can have multiple lower highs and lower lows, right? So in this case now, the opposite is true because from here we look at where the market is. If we look from here, the market currently is at this zone here, right? This is where the market is. So I look from this zone upward. The first pullback, the first valid pullback that I see is what I marked as my inducement. So in this case, this will be where I'll be marking as my inducement, right? This is where I will be marking as my inducement. So this inducement now, what I want to see with this inducement is for price to come above, take out that inducement, and then continue to the downside. So once this happens, we have a valid break of structure at this point here, right? So this is a valid break of structure at this point because it has taken out liquidity. This is a valid break of structure. Forgive me for the miss for the typo. So this is so because it has taken out liquidity, and now we can have our trading range from this high here to this low. Obviously, in the next class, we are still going to look at the inducement, right? We also need an inducement before buying, but this is the framework of what we look for. So now, what can you use this inducement to do apart from verifying break of structure? So now, if you want to buy, if let's say this market, right, you want to sell off this market, you can wait for the market maybe to take out the first pullback, to take out the first pullback, and maybe look for a point of interest now on the second pullback to like sell off from. That is why you see that people would often not choose the first pullback, but choose a point of interest a little bit above the point of interest that you'll be choosing. And if you choose this point of interest here, you see that the market wicks you out, continues, or it taps into a point of interest slightly above where you were planning to sell and continues to its intended direction. So, of course, we will not show you only this in light diagram. We are going to show you this in the chart as well. So, if we move over to the chart here, if we move over to our chart here, what you can see here is, right, we have a pullback here. This pullback here did not create a valid break of structure. This is not a valid break of structure, right? So we did not have a good zone to buy from. But now, when the market finally rallied up, it created another inducement. So this zone here acted as our inducement because if you look from this high to this low, this is our first pullback. So we said the first pullback is your inducement. So once this inducement got taken out, we could look for a buy zone, right? The last example that I explained to you. So that is how we got about this AUD, this trade on AUD CHF, sorry, AUD USD. So we have multiple examples on this trade that I would like to be showing you. Now, sorry about the rough work. I've been using this chart to teach a lot. Now, we have this market is pushing up here, right? This market is pushing up here. When the market pushed up here, it created this pullback. This pullback was completed when the market swept this high. So now the market came back below, took out this pullback here and went ahead to close above our previous zone, giving us what we call a break of structure. So obviously, when this market took out this inducement here, we already had a ready to buy trade, which was this zone. Obviously, I did not get into that trade. So now, once this break of structure occurred here, once this valid break of structure occurred here, we sort of had a valid trading range from this low to this high. Now, from this low to this high, now we had this trading range, right? Now, you look from here, we waited for this inducement to be taken out. Once this inducement was taken out, we traded off the other flow here, which you can see price went ahead to respect that perfectly, right? Price went ahead to respect that perfectly. And with the fact that price had already taken out inducement on this leg, price went ahead. That is the reason why we ended up marking this as a break of structure as well. And when price went ahead, it gave us another inducement here, then returned back to our point of origin, to our point of interest on our trading range of this new break of structure that it created, and then bought again. It bought again, still went up, came back and bought again. So we are still looking to buy here. So this is where the market finally violated the zone. So That is how we look at it. Then going down to the bearish example I showed you. So what I told you is if the market is pushing down, right, the market was here. So if you look from here, you see that this is our inducement at this zone. This is our inducement at this zone, right? But now this is a smaller time frame inducement because I was not looking at this market in this time frame. So this is a smaller time frame inducement. So once this market took out this inducement, we could look for a sell. We started looking for a sell, and the only unmitigated other block was this one, or the only unmitigated point of interest was this one above here. So once the market tapped into this point of interest, we look for our sell, and the market gave us a sell and a break of a sold to break this structure to the downside. So after that, we were looking for another sell here, which unfortunately did not hold. So that is how we identify inducement, and that is how we use it to mark out our break or structures and also find our trading ranges. So thanks for watching. God bless you all. And if you are watching, if I'm sure I'll be uploading this on YouTube. If you are watching on YouTube, please follow me for more. Like, leave a comment, and tell me what you want me to cover in the future. And also don't forget I offer paid mentorship. It's $150. And yeah, you learn everything that you need to survive in the trading market and what you need to become profitable. God bless you all. Have a nice day.